Stocks selling off hard today into the close, losing gains earlier in the session after the U.S. confirmed it has found its first case of the Omicron COVID variant. S&P 500 now nearly 5% below its all-time high. Joining us now is Bridgewater's head of investment research and co-chief investment officer of sustainability, Karniol. Welcome back, Karen. We know you've been sounding the alarm on inflation, persistently higher inflation, but you guys have liked stocks. Is anything changing in the portfolio now that we have this new variant and that we have a much more hawkish Fed talking about speeding up the pace of taper?
Not materially. I mean, the way I see it is you have an extraordinarily strong economy, extraordinarily strong. You have the strongest inflationary pressures that you've seen in decades, and they're broad and they're pervasive. You have a Fed that really hasn't been tightening very aggressively relative to what the economy needs. And that's pretty bullish for stocks. I wouldn't say stocks are as attractive as they were earlier in the cycle, but you still don't have a Fed aggressively tightening into that. But that said, bond markets are pricing it as if the Fed is never going to tighten, as if they didn't even hear Powell say that finally he acknowledges, that with this kind of inflationary pressures, the Fed will have to act eventually. And so that makes bonds extremely unattractive, stocks very attractive. And then when you look at what's happening with Omicron, you basically say, look, none of us know. None of us know. There's a lot of unknowns here, but a lot would have to be true to change the current trajectory of how the world, the paradigm the world has of dealing with the virus. So far, every single wave has been scary, but has had successively fewer and fewer and fewer effects on the economy because we've learned so much about how you can have more narrow restrictions. Obviously, you have treatments, we have vaccines. So absolutely, Omicron could, but what would have to be true is Omicron doesn't need to just show up in the U.S. It has to fully replace Delta as kind of the common strain. And it has to have much higher morbidity, mortality than, kind of what Delta has had in the context of our current treatments and vaccine. Could it happen? Yes. Would I be aggressively selling stocks and buying bonds that don't price any tightening into that? No.
But Karen, doesn't what you just said imply that the market still has to price in the tightening, which is, I guess, inevitable at some point in the next year, and it's still yet to be priced into stocks based on what bonds are doing?
Oh, absolutely. But you'd really think the right trade there is to be short bonds. That's really basically the way it usually looks is that first the Federal Reserve tightens and the bonds start showing it. You really have to tighten kind of more than the economy can take to materially impact stocks. If the economy is ripping and you just get a little bit of a higher interest rates, if the Fed is not tightening enough to materially slow the economy, shorting stocks might not be the right trade, but bonds, you look at the level they're at, and that basically says, we're not really tightening into this inflation ever. It's transitory. It's going away. Don't worry about it. And to me, when I hear what Powell said yesterday, that's a paradigm shift. That's a real turning point of recognizing that's not the case.